candle we saw yesterday that took us from 18,600 all the way back above 20,000 was probably the most fitting way to end what was the worst quarter that Bitcoin's ever had in its existence. Yeah, that's exactly right. I think I read a stat that said, here it is. Yes, here's a stat that shows that this last quarter was the worst quarter that Bitcoin's had since the day it launched. So if you survived this, well done. And I guess the big question is, what's going to happen now? What's going to happen with the macro environment? What's going to happen with Bitcoin? And can we expect a quarter two, which is any better than what we've seen? Have we seen the worst of it? That's what today's all about. Today's Friday. It's a big Friday banter. We've got some huge guests. And you know what we always do to make the guests feel awkward in the waiting room is we play the song. Alrighty, welcome back. And if you're still here, that means that you have survived. You've survived the worst quarter in Bitcoin's history. You're pretty much surviving the biggest unwind that crypto markets have ever seen, the biggest leverage unwind that the crypto markets have ever seen. And it just keeps getting worse and worse and worse. Luna, Celsius, BlockFi, Voyager, now 3 Arrow Capital. So much going on in the markets today. And I think we're going to be discussing all of that today. We're going to be discussing Sam Bankman-Fried, the bailout king. We're going to be discussing BlockFi to see if BlockFi is selling itself for 25 million or whether they're going to accept this new offer that's now on the table. There's an offer for, I think, 400 million, but it comes with a whole lot of different strings attached. We're going to be talking about macro. We're going to be talking about whether or not we're in a recession, and does it actually even matter if we're in a recession? And then I think we need to talk about Jerome Powell and what he said this week about how little they know about inflation. So we've got a massive show here today. What I need from you guys is I need you guys, as I said to you guys, we were shadow banned. I need you guys to help me get unshadow banned. And the way that you help me get unshadow banned is you smash the like button and you comment and you say great things in the chat. You tell me how good I'm looking today. You tell me, just say good things. And then that's how YouTube says, okay, these guys are actually cool guys and they bring us amazing content. And that's what we're here to do in the bear market, in the bull market. I've also been told that I speak too much before the Friday banters, and so I don't give the guests enough time to talk. So all I'm going to do is I'm going to say, this is Friday Banter. It's brought to you by a new sponsor. The sponsor is called BitGet. They are one of the exchanges. We are now supporting one of the great exchanges. I'm going to show you later on in the show. I'm going to be doing a 10x of someone's portfolio, and then we're going to be 10xing people's portfolio on BitGet every single week. So without further ado, and I see only 3 minutes and 48 seconds into the show, definitely a record for me. Let's get this banter on the road. And today we've got Alex, who's no stranger to banter. He's been here before. He's I guess you can call him a trader, economist, a degen. We've got Jeff Booth and we've got Jim Bianco. So today we're probably going to be looking at a very macro view of things, especially after the news that we got yesterday. I mean, I think we all saw yesterday. We saw that Bitcoin close. We saw Bitcoin close with the worst close that it has had ever. I think there was a similar sentiment in the S&P. And I guess the big question now is where to from here? Now that we've had quarter one and quarter two so dismal, where do we go to next? Which one of you want to pick it up?
Sure, I'll jump. We live in a financial system that requires monetary easing globally. So we live in a financial system that requires printing to stay solvent globally. And if that printing, which is if you asked what money is, all money is information. We don't want more money. We want more of what we think money will buy us. And information is the signal that holds us together. So if you apply misinformation to money, you have to, as a byproduct, have misinformation everywhere in society. People are looking through that misinformation, and everybody is looking through that misinformation because it's part of the system. And that system requires more further and further manipulation of money all over the world. So what that means is if you contract that money supply anywhere, you're going to have not a recession, you're going to have a credit unwind, depression, the whole system fails. That is an unfortunate truth. Now, so you can expect more easing at some point, but what Bitcoin is on the other side, it's an independent network that is moving alongside that building network effects, a protocol layer that is a different. It's so when you price Bitcoin from the system, you're making a mistake. So one Bitcoin is still one Bitcoin. If what was going to happen, if the credit markets just kept on, if Powell didn't print eventually, and everything reset, Bitcoin would be the only thing of any value, because everything would reset. Okay. Every bank would reset.
I think I hear what you're saying, but I also want to just play a little bit devil's advocate. You had the Fed, or you had the governments printing trillions of dollars. You had the Fed increasing their balance sheet by trillions of dollars. I think the famous stat is that 40 or 50% of all dollars ever created were created over the pandemic. And now they're pulling back ever so slightly. So, okay, release 5 trillion into the economy, try and pull back a little bit. Isn't this just part of a normal cycle? I mean, are we not saying, the markets grew aggressively for so long. The markets grew aggressively for 2 years after the Fed started to print money. It couldn't carry on forever. It caused incredible inflation. Is this just not a slight pullback before
that's what people believe, and this is very different. Very, very different.
Tell me where I'm
wrong. And so I'll let Jim speak, but this is a very different setup globally. As I wrote in my book, to handle the last 20 years before 2020 of natural deflation from technology moving faster and faster. So what's supposed to happen in our world when we develop technology is prices are supposed to fall. Seems pretty logical, right? We develop more things, prices fall as we remove labor from things. It seems like a pretty logical scenario. So why isn't that happening? For 20 years before to 2019, the world increased debt by 185 trillion to produce 46 trillion of economic growth, $4 to every $1. And so what happens is you have this giant gaping hole of requiring exponential monetary easing to be able to stop a debt spiral. If you pull back on the monetary easing for any length of time, you're going to have a debt unwind. That's where we are, unfortunately, in the overall macro.
Jim, I want to hear your view here, and then I have a follow-up question. But let me hear your view first about what Jeff said.
Yeah, I mean, I just feed off of what Jeff said. There's a monkey in the works right now, and that monkey is inflation. All of that money printing and all of that, pumping to try and get GDP to go up, get the economy to move forward, works as long as you're in an environment where you have no inflation. Now we've got major inflation. We got 8.5% inflation. The June inflation number is going to be every bit as bad as the May number. It's probably going to be another 1% number. In fact, that's the consensus forecast on Wall Street right now, is it's going to be another 1% number. The Fed is in a difficult spot. If you start printing because the economy's crashing, you're going to have huge inflation and you're going to have a huge problem. If you stop printing because inflation is high, you're going to have a huge problem. So it's, who gets voted off the island here? Somebody's going to have to die. Which way are we going to go? Now, because there is a narrow path where no one dies, but that's a difficult one. The Fed has taken and has been extraordinarily clear on this. And I know Wall Street has a hard time understanding this. And I'll put it in my words. 40% of the American public has less than $1,000 of savings and they rent, they're getting crushed by inflation. Fed's going to side with them. Asset holders, you're just in for a bad year. Sorry. And that's basically the attitude the Fed's having. Does that mean it's going to work out? No, it may not work out. Does that mean it could be bad? Yeah, it could very well be bad. But Jay Powell spoke in Central Portugal just the other day. He couldn't have been more clear. He's going to tighten and tighten. And when you're screaming for mercy, he's going to give you one more tighten. He's not going to back off till he sees prices break. Now, I could argue till I'm blue in the face whether that's right or wrong. That's what he said he's going to do. And I think that realization is still very difficult to come by on Wall Street, because all the narrative I hear on Wall Street is, when's Jay going to stop? He's not. He's going to stop when prices peak and start down. And yeah, he's looking at a backward-looking measure. He's looking at inflation. He wants to see it peak and go down. So he's not going to stop anytime soon. And so this is kind of the push-pull that we've been stuck in. So the new regime, the new world we're in right now is inflation. And it's really the biggest game changer we've seen in the last 40 years. And it's going to be very difficult to get out from underneath this.
So if you were sitting in Powell's shoes, you say Powell's
I'd resign.
Yeah, exactly.
I'd resign.
There's no way out.
Under the assumption that you've got to do the noble thing and you can't resign, under the assumption that you have inherited this mess, you're now sitting here today. What do you do? What do you do?
Okay, so let me back you up. If I'm sitting in Powell's shoes, I created this fucking mess to begin with. So let's not mince words here. The problem is, as I've liked to say, the policy mistake was last year by using the word transitory when inflation was going from 1.5 to 7. They should have started this last year before it got out of control. This year is the consequence. So let's at least get that on problem. Powell created this. It's all largely of his creating. He's the one who turned on the presses to a record amount during COVID. All right, maybe in March and April, that might have been March and April of 2020. That might have been justified when you had 14 million people lose their jobs in 1 month. But he kept them on until March of 2022. So let's make sure that we understand he is the perpetrator. He is the arsonist that we're now asking to put out the fire that he created. And so now what should he be doing at this point? I think he's got a difficult spot right now. And I think, he has got two paths and he has chosen the path of trying to bring down inflation. It is killing the president's approval rating. Powell was in the White House last month. He was ordered by Biden to do something about inflation. He was not ordered by Biden to do something about flailing growth. The Fed's credibility is on the line as well, too. So what's he going to do? He's going to stay this course. He's going to raise rates 75 basis points at the end of this month, and he's going to look to be more aggressive. And only when the economy breaks so bad that you could say, well, now inflation's done because we've broken the economy so bad, that he'll back off. But at that point, it's too late. I hate to be a Debbie Downer, but it's a bad situation that we've got ourselves in because of this inflation.
Alex, your thoughts?
I largely agree with everything Jeff and Jim said. Now, I think that there is one thing that we have to consider, which is the fact that much of the impact is behind us, mostly in crypto. In crypto, I would even said that the worst is most definitely behind us. The industry is almost quasi dead at the moment. I think the systemic factors within crypto are mostly gone. The only thing left really here are miners. Basically, miners are starting to blow up. They're already here they're already in a tough spot with BTC under 20K, 19K, 20K. If we go to 15, they're gonna start puking. But that's literally the only thing left behind. And as I'd like to say, I think that this thing about capitulation is that it never ends. It's mostly in an industry where a great number of market participants have their entire net worth in the asset class. The more price goes down, the more capitulation you see. That being said, I really think it's the systemic side on crypto is behind us, and now it's strictly about the macro. And the macro is I'm like I'd say like 80% on what Jim is saying, that it's really just about inflation, and inflation can still keep on coming higher. And if that happens, I think we are in a replay of for Bitcoin of 2018. On the short term, I also think that inflation is going to come up hot in the next month. So basically, the next 2 weeks should be difficult in the market.
When you say, you mean higher than the 8.6?
8.6. Yeah, the thing is, we needed the Fed needs it to come down, not just stay there. I think it's fair to assume that it's not going to surprise once again 30 basis points, 0.3% on the high side once again, the year on year. So I wouldn't be expecting the same kind of crash we just saw on June 10th to the 13th. But it's not really. I think it's important. I mean, also my audience is largely it's many traders out there. I think it's very important to just accept that trying to understand and trying to pinpoint where the bottom may be. It's not about where this indicator lies or on RSI or like so many metrics out there, but just the fact that it depends on the macro, and until the macro doesn't turn, you have to be either accumulating and taking a step back or trading very short term and very aggressively.
So can I ask Alex a question?
Yeah, go for it.
So in the TradFi world, the way I like to say capitulation means that all you're left with are diamond hands. All you're left with are people that are still solvent all the way to zero. You've blown out all the leverage traders. You've blown out anybody who's a weak hand at all. Have we done that yet in crypto? I agree with you. Most of it's been done. Is Saylor going to survive this? Is FTX going to survive this? Is all of these other people going to survive this that are in that problem? Maybe FTX is a little bit out there, but I've got my worries about them as well too. But have we really blown out everybody that all lower prices do is produce a smaller net worth and don't produce any more forced liquidations?
So I have a theory about this. I think the theory is that you've got two types of capitulations in the market. The first type of capitulation is purely a price capitulation, and it is people that just can't hold beyond a certain price. And I think maybe we have hit that in the great unleveraging that happened 2 weeks ago. I think you have a second capitulation, and the second capitulation is price over time. And time is defined as the cost of opportunity cost, the cost of holding money, and conviction, because your conviction is a function of everyone had very high conviction when prices were going up, and your conviction gets tested with the negative news cycle and prices going down at the same time. And I think we haven't had that capitulation yet. I remember that capitulation very clearly from 2018, where we probably all lost our money kind of near the beginning. And then what happened between that point and the next bull run was that we lost our belief, or that our belief was tested. And I think that capitulation still has a long way to go. Jeff, I see that you want to comment on that.
Yeah, and this is why it's so important to understand the models we're living in, because it's changing so fast. DeFi or crypto is actually largely the exact same as the entire credit markets that the Fed has created all around the world without the backstop of the Fed. That's so when Bitcoin has no counterparty risk. And so what ends up happening is it's leveraged against these things, and there's created huge leverage. Fear and greed is in any market. And when you can create massive leverage or returns in crypto broadly and leverage to an asset class that has no counterparty risk to do so, Bitcoin as well unwinds and cleans out all that leverage. So Jim's right. There's still probably some play to go on that. Because Bitcoin, and Alex is right, Bitcoin miners did the same. Some Bitcoin miners took greed and fear, took too much leverage and mining equipment, bought at the top. That's what markets look like, and they cleanse. And Bitcoin without counterparty risk kind of sells off during that. But here's the bigger thing that most people are missing. They're pricing Bitcoin through that system. And what I just said is Bitcoin has no counterparty risk, and it can't be. It's decentralized and secure by design. It is a new system building. It looks like the internet of the future. And I'm investing in that space through. And if you knew where it was coming, if you knew it was being built on top of it right now, you wouldn't make that mistake. Bitcoin is actually like buying a piece of the internet. We couldn't invest in the internet. We could invest on the companies on top of the internet. And so it's hard to understand what I just said because you wouldn't, unless you're in that space and understanding what I just said and seeing what's coming, you wouldn't see what's coming in the future. We can't predict the future very well. If we could predict the future very well, if you think about Apple and iPhone versus BlackBerry, when we had our BlackBerries, we wanted our BlackBerries. We would have never changed. All of a sudden, iPhone comes on, everybody changes immediately because it provides us more value. What's so hard to understand in this space is because Bitcoin, right now, people are explaining the protocol level and the eyes glaze over. It's really hard to understand. We interact with products that give us value. And those products that are giving value on top of this protocol layer are really early in the cycle. So it's hard to see.
Okay, I mean, on that note, then let me challenge you. If I look at Bitcoin, and I agree with you that Bitcoin is a base layer protocol and very tough to understand, but the Bitcoin protocol itself is not really designed to do very much but transfer value between one person and another, then maybe we should look at Ethereum and say, no, Ethereum is much more geared to be like an internet.
Okay, awesome. I'll help everyone produce a real easy framework. Imagine a triangle, just place triangle, you have three sides. A blockchain can only do two of three sides. Bitcoin decentralized on layer one, decentralization and security. So Bitcoin became essentially a digital gold, and that's all it did. And people complain about what it could do, but it opened up somebody to attack vector that, or DeFi to attack vector that by solving scalability. That's what Ethereum did and every other coin did. But to do that, they had to sacrifice decentralization or security. So you see them all being centralized. And then you have to ask the question, just an economic actor, why would you have centralization in a blockchain? It's a high cost database. It doesn't make sense, right? So what you see is by sacrificing to solve scalability, they have to sacrifice decentralization or security. And so one of those two things gets compromised. And so it can't be a base layer. So what's happening now, early is Bitcoin solving that in layer two, Lightning, Liquid, whole bunch of other really early solutions that now you can start building on top of that, and it's built on a solid foundation. And so what's happening is the entrepreneurs that understand what I just said, that's early, are moving over to Bitcoin because they couldn't, before this, Bitcoin was useless to them. They couldn't build on top of it. And it's true. So as a market created something that entrepreneurs could build on top of, even though it would centralize and be less secure, entrepreneurs went there because you could make a lot of money in the short term. That won't last.
All right. So your view is that we're going to live in a one-chain world, and that one chain is going to be Bitcoin, and everything else eventually is going to fall into the category of a very expensive database.
Because I can't see the economic rationale to have something on a blockchain, because if you're building on a blockchain like that, then you're building on quicksand, or you're putting all of your resources into somebody else's change of their mind.
Okay, so I see, Jimmy, I see that you're nodding. Wondering, do you have the same view that we're going to be in a one protocol, one chain world, which is going to be Bitcoin, and everything else eventually is just going to become expensive computing, expensive database power?
I was thinking more conceptually or larger, that we've got some issues that we have to work through. So one of the things that's caused this deleveraging and it's caused this crypto winter is it's not just that people got over levered, but when you do and you start the winter, you start to see all of the problems that are starting to be exposed. in the system. Whether it started, I think it started with the Terra failure in May, and it's just been accelerating since then. But we've got a lot of issues. So what Jeff was saying makes a lot of sense. We got to go back to the drawing board. Whether you're talking about Ethereum, you're talking about Bitcoin, or you're talking about any other chain or any other protocol, and we got to say, what are the problems that we've now discovered? You know, like my big one now is exploits. I think that going forward from here, you know, protocols are going to get the death penalty for an exploit. You're not allowed to ever make a mistake again. You've made too many of them this cycle right now. And if you're going to rush to build something, get it out the door, and then it gets hacked or exploited, you're done. Sorry, move on to something else.
I must say, as I listen to you, I think that if I look at the reason why this unwind has happened, it's actually all got to do with centralization and CeFi. I mean, if we go back to where the crack started to show and how the crack started to have cascaded down, the DeFi protocols are functioning perfectly. Like the DeFi protocols haven't yet been affected. They're all doing exactly what they were supposed to do.
Mm-hmm.
But the protocols that are collapsing, let's call it Luna. Luna was so Luna was 100% leverage. Let's call it 100% leverage. My view is that the mistake that they made was they became a partially backed stablecoin, which is basically under collateralized stablecoin. But then what we realized is that all the cascading liquidations that have happened afterwards, and let's name them. So you got Celsius, 3 Arrows Capital, potentially Voyager, potentially CoinFlex, potentially BlockFi. Every single one of those is centralized, and every single one of those didn't have risk management on chain. Whereas all the DeFi protocols, all the Aves and whatever else, none of them are going insolvent or have any liquidity issues because they're all decentralized and they operate on a set of smart contracts that are transparent for everyone to see. So to me, we try to mix centralization and decentralization, and what we're learning now is that the centralization is the issue.
Go deeper. Just fear and greed, which will be in any market. Ask yourself this: Bitcoin doesn't give you any yield. There's no yield in Bitcoin, right? Just like gold didn't give any yield to a bank. So it makes more sense to create yield. You have to make the thing you're pegging to a smaller percentage of your portfolio, and you have to get yield somewhere else. So all of these DeFi protocols did the exact same thing and promised yield. Where do you get the yield? Where is the yield coming from in these protocols? So they have to do that by leveraging rehypothecation and building an entire. And the higher the yield, which is created, it is greed. Everybody's chasing the same yield, and people believe falsely that they're not applying counterparty risk. And when they're giving their coins to some other exchange, they have massive counterparty risk, because when it unwinds, you see who's swimming naked. That's just all that's happened. The entire system.
Alex, do you agree with my thesis around the deleveraging, and do you think that there are more leverage, more unwindings to come? And I think specifically, I'm thinking about Sam Bankman-Fried this week came out and said that he believes that a lot of the tier 3 exchanges are now secretly insolvent. I think he said something like that. What do you think?
Yeah, I think they're small. They don't matter anymore. It's my view. It's just mostly about the macro. I'm really not concerned about intrinsic factors within crypto any longer. I am, but barely. It doesn't matter anymore.
Okay, Jim, you mentioned something about you have some concerns around FTX. What we're seeing in the market now is FTX maybe even strengthening themselves more and more, giving ridiculous offers to BlockFi, giving loans to struggling parties to try and prop up the system. We can kind of see that those loans aren't really loans, but are much more very sophisticated fire sale mechanisms to obtain ownership of highly, don't know what the right word is, but highly leveraged and hurting parties. What is your concern around FTX? You mentioned that you're not sure that FTX is going to make it.
Centralization. That's my concern. Is that we're going to give Sam all the power in this space, and he's going to run the whole thing, and he's going to run it like his favorite blockchain, Solana, which will go down every other week, which is completely centralized, and which will spin out governance proposals to basically take coins away from wallets, like they did a couple of weeks ago. That's my biggest concern. Is that if we're going to come out of this with a JP Morgan / Fed type of person in the form of Sam Bankman-Fried, then let's just all run it off his server down in the Caribbean. And let's just be done with this whole blockchain thing.
Exactly.
Sorry, I want to add something there. I mean, I'm not a big Solana proponent. I mean, I'm just a trader in this sense. But I got to say, it wasn't Solana, it was SoLend. It's a very big difference. It's not that Solana was looking into taking away coins.
All right, you're right. It was the protocol. It was the protocol. But the Solana blockchain has had enormous number of problems as well too. But my biggest point is it's centralization is what it is. Is we're going to consolidate the power around one person. We're not. Jeff was right. The whole thing works with decentralization. If we don't decentralize, this is an exercise in futility. Because there's no point doing any of this unless it's decentralized.
Are we saying that what we're witnessing now with people like CZ, with such a massive empire sitting on heaps of cash and buying up everything, Sam Bankman-Fried with a checkbook that feels to never end, and maybe one or two other players in the industry, are we saying that instead of decentralizing the system, we're just merely moving everything from one centralized bunch of people supporting or lobbying very strongly with political parties to another bunch of younger people also writing huge checks to political parties? Because I must say I tweeted something like that, and I must say I untweeted it very quickly just in case,
that's exactly the problem. That's what this has to do, right? And if you think about what FTX or Coinbase or any of the exchanges do, they create a whole bunch of money in fees from selling all of these coins, 20,000 coins that are just pyramid schemes, most of them, right? And they use that to be able to create those profits to be able to drive an industry to drive those more profits. It doesn't work. That whole thing will not work. It's if you think about the macro that Alex is talking about, just remember every economic decision we're talking globally right now. Globally, every economic decision, price signals are completely distorted. All people talk about is, when is Powell going to print? When are 12 people going to press a button and destroy your currency? That's it. In every single, your housing, your banks, every single thing is around when are 12 people going to do that. If that's the world you think you should live in, and you want to concentrate that much control into a very small number of hands, regardless of the existing system or a new blockchain world, then you've just given away your sovereignty and your freedom to those people who could change the rules forever.
What do you say to the people that are saying, but here's a guy who's donating, he's doing amazing stuff for the industry, he's lobbying to get favorable regulation, he's donating millions and maybe, he said, even billions of dollars to political parties so that we could get the favorable regulation. Is there not the flip side of the coin that maybe right now that is what we need?
No. What would you do as an economic actor making that type of money, and you could design regulation to give you that type of advantage? What would you do? What would any human do? If you can manipulate money, human history says you will.
I'd say to those people that are saying that he's doing the right thing, I get what he's trying to do, and I understand what he's trying to do, but then just wait for a central bank digital currency, because that's what you want. If you don't want decentralization, you're just waiting for a central bank digital currency. And the next thing it'll come, it'll become USDC. It'll become, they will issue it out, and then they will bow to every whim of the current regulators of CeFi, and you will have accomplished nothing at the end of the day. Now I shit on this stuff a little bit. Let me say something positive. Let me back up and say, look, in the decentralized world and in some of the DeFi protocols, you mentioned Aave. Let's throw in Uniswap. Let's throw in Maker. Let's throw in Curve. These are fairly decentralized protocols. Yeah, they could be more decentralized. Decentralization is a continuum. It's not a binary, but they could be more. But they're fairly decentralized, and they're working very well during this crypto winter. We should be looking towards those models. And anybody that wants to build on layer 2s on blockchain, on Bitcoin, should be looking at those models and saying, that's where we have to be moving towards, not towards shifting from CZ to Sam Bankman-Fried and just going from one master to another master, because centralization is not the answer.
All right. Yeah. Look, I think on that note, let's take a quick break. Let's just thank our new sponsors, and then we'll move on to, I want to talk about, you guys said it, that this is all a function of Powell and when, Powell's after inflation. So I want to get your views as to when this cycle potentially could end, because when I listened to you, what I thought to myself was maybe I should just go on vacation and come back why put myself through the suffering? Let me go and enjoy some time in the sun. But we'll do that straight off. Alrighty, welcome back, and that is welcome back to everyone except now we've got Jim back. Welcome back. Friday Banter is brought to you by BitGet, the new exchange sponsoring the show. We'll do a full review of the exchange pretty soon coming up. I'm kind of glad it's not one of those big centralized giants that we were talking about now, because it would have been a little bit inappropriate to talk about those. Before the break, you guys mentioned that this is a function. Jim, I think you mentioned this is all a function of when about ending inflation. I have a problem. I'm looking forward. I'm not seeing an end to inflation, and I'm certainly not seeing anywhere near the levels that Powell's talking about where he would be happy. I'm seeing commodity prices going up in pretty much a straight line. We've still got the war. We're entering winter. We're going to soon be in, the next season is going to be winter in Europe. We're in summer now, and maybe they don't need as much gas and as much oil. But in a couple of months, it's going to be winter again, and it's going to be gas and oil season. Doesn't look like there's any reprieve coming from Russia. It doesn't look like they're making any progress in brokering any kind of peace. I don't see inflation coming down. I don't see inflation coming down anytime soon, no matter how much Powell controls the demand side of things. What do you think? How long can this last? Alex, I'm going to hand it to you because I think you've had the least airtime so far, and I know that you are looking at the macro. So let's start with you.
That's fine. I think it's mostly a question of when Ukraine ceases to be a main issue. We need, I think the markets need Ukraine, some sort of resolution in Ukraine in the good sense. I'm talking about basically an agreement of some sort and sanctions being lifted. And that I don't think, it doesn't seem that it's going to happen this year, but this is the kind of thing that comes as a surprise and happens overnight. So it's very important for anybody who is out there in the markets to keep an eye and be ready to act very fast when that happens. And I think it makes sense for that to happen sometime next year due to simple political pressure. This thing, the way it's going, it could blow up, and there is a likelihood that it simply just blows up politically, and that's not acceptable. So politicians in the US could easily pivot towards pushing Ukraine to an agreement.
Okay, that sounds like a long time. What do you guys think? Jim, Jeff?
Yeah, let me throw something a little bit different in here too. The Organization of Economic Cooperation and Development, the OECD, puts together, fancy word, is harmonized inflation statistics for all the developed world. So they, so you can compare Germany to France, to the United States, to Japan, to Australia. And if you look at their core inflation numbers, the highest inflation rate in the developed world, developed world, is the United States. That is very rare for the United States to either be the highest or the lowest. As a big economy, it's usually somewhere in the middle, but we're number one. San Francisco Fed has done a study on that, and they asked the question, why are we the highest inflation rate in the developed world? And the answer they came up with is we stimulated more than any other developed country off of COVID. The amount of money printing, stimulus checks, deficit spending, all together, that actual incomes for the Americans went up during COVID. So when 14 million people were losing their jobs, we were sending them so much money, their financial position was actually getting better, not worse. Remember, we added an extra $600 or $500 to unemployment benefits during that period as well. So we've got a problem in the United States. So Alex is right. Yeah, we have to get some kind of resolution to the Ukraine. Otherwise, there's going to be a problem. But we also need to figure out a way that we've got to stop with all the stimulus spending in the United States. What I'm worried about here is what you're seeing in the markets to this week is, oh, maybe we're going to go into recession, and maybe that means the Fed will stop raising rates so that risk markets can rally. Well, then we're just going to go right back to the highest inflation rate in the world, and we're going to have inflation turn right around and go right back up, and we're just going to keep repeating this massive volatility cycle of hike like crazy, ease like crazy, hike like crazy, and the markets are going to just bounce around like crazy. Ultimately, what we've got to do is we've got to wean ourselves. Let me put it this: we got to get rid of all the modern monetary theory people, which pretty much dominate the Fed and dominate the administration. That the answer to everything is not the speed of the printing press, because that's the way we seem to think about it right now. We're in this perverse world where, man, if only the economy would crash, the Fed will turn on the printing press, and then I can go buy Apple. And then it's just kind of upside down. But that's the mentality that we've got right now. And that needs to be wrung out.
But they created that. I mean, that mentality is created as a result of conditioning, because every other time that the markets crashed below a certain point, the medicine has been just print money. We'll get ourselves out of it.
And every other time it worked, except every other time you didn't have 8.5% inflation. That's why that's the game changer.
Yeah, it's actually worse than that. And remember, it just when everybody nodded, then said technology is deflationary, and it's exponentially so today, and it's going to be more exponential. It's moving faster and faster with AI, robotics, and everything else. When everybody nods and says, "Oh yeah," and then realizes, wait, we have to have inflation. They believe in both things. They believe, yeah, technology is inflationary, it's moving into every industry, and we can have inflation in our monetary policy. And what they don't realize is, by having inflation in your monetary policy, what you have to do then is take, because inflation is wage deflation. It's the same thing. It means you have to, by design, take from the middle class and poor and give to the rich and centralize that function. And it has global consequences. So you guys are looking at this through the US lens. And if you look at the global consequences of what we're talking about, here's the problem. US has 126% debt to GDP at government level. If you have deflation, if you have a depression, that debt to GDP explodes and the credit becomes worthless all over the world. So they can't. They, unfortunately, door number one, they can't. But the problem is, as they tighten conditions, those same dollars that are owed to the U.S. Scream up all over the world, and other countries start failing. And that cascade of failures all around the world, effectively the U.S. is forced, I have to go and bail out the entire world. But as they go and bail out the entire world, energy prices keep going up. But because they're being priced in US dollars, and essentially what Russia just said is, you can print all your money you want, but my energy is worth more, right? And so that's what's happening on a global basis right now. It's happening to food prices. It's happening to energy prices. And Jim's right. They're going to have to. If you look at the Weimar Republic during the time where their currency was failing, that cycle of up and down, faster and faster cycles. And if you took leverage in that, if you were all in on one bet or all in on another bet, you got wiped out, because that cycle went faster and faster, and that's where we are.
Okay, so let's just get straight to the point, because I think that's what everybody wants. I think it's been, the foreplay has been great. I think now it's time to get into the thick of things. And I think the question is right now, what would you be doing with your money? What would you be doing if you were invested in crypto? Would you stay invested and take a vacation? Is it time to go short? Is it time to be buying? If you are buying, what should you be buying? What's the strategy? Great. We've got a great lay of the land. You guys have explained it brilliantly. I feel depressed. I feel like I want to crawl under the table and basically just, I don't know, die. What do you do when you crawl under the table? What do we do now? I mean, do you start nibbling for the bottom, or do you sit on your hands and be patient? Do you buy bonds? Do you sell bonds? Do you buy equities? Do you sell equities? What do you do?
So here's the thing I do, and I can't tell anybody else what to do. What I've realized is this market is going to fail spectacularly over a long time period, and it's going to be up and down. And that means if you're all in on one bet, you're probably going to get wiped out. You might make massive riches and stay in it too long and then get wiped out. Or if you're all in on the other side of that bet, you're going to do the same thing. And it's going to swing violently back and forth around the world. So what I'm doing is, what protocol is safe and where can I spend my time and investing and seeing hope of the future, not just for making money to escape and have enough money to escape the existing system so I can go live on a boat. Because if the existing system fails, the whole system, everything fails. So you need a transition mechanism. That's what I think Bitcoin is. So I'm not leveraged to Bitcoin. I'm in Bitcoin. I don't care about the price. If it goes down, I'm going to buy more. But more important, I'm investing in the ecosystem that's building on top of that, and I'm keeping cash.
Let me ask you a question, and feel free not to answer because it is quite a direct question. But what percentage of your wealth today currently sits in Bitcoin or Bitcoin related?
Yeah, I'm not going to answer, only because I don't want people trading on what I do. So but I'll say this: if it went to zero, I would be fine. And it's not going to go to zero. But I'm not going to lever anything into one bet today, because there's a whole bunch of black swan and risk events in the world that are going to increase all around. So I'm looking for flexibility right now in how I design both my portfolio and my life, and where I might need to go to.
Is it the biggest part of your portfolio?
It's probably in related companies, and I would say, I'm going to answer it different. It's the greatest part of my time, which is more important in my portfolio. It's how I think about, how do I transition from a system that is based on manipulation and corruption, because it is, I wish it wasn't, but it's based on manipulation. How do I transition for my kids to a system that is based on truth? That's that's what I think about. That's why I'm in it.
And what else are you, and I'm going to come to the other two guests in a second, but what else are you investing in now actively? So you've mentioned that you're investing in Bitcoin and Bitcoin related companies. You're expecting turmoil in the economies for quite a while. I guess you're also expecting the housing market to cool off, because I think that's what everyone's talking about as one of the final frontiers. What else, if anything, are you putting your money into, or is your money just sitting in US dollars and
US dollars and companies that I believe, companies, design and technology companies that have network effects, positive cash flows, good lifetime value economics that can survive a storm and thrive. And so when I think about returns, if I go into returns, and I think, okay, well, where would I calculate Bitcoin returns to be? I would still make investments outside of Bitcoin where I thought the returns could be higher than that rate. But I do believe that rate is going to be a pretty high rate over time, and I certainly wouldn't want to be on zero in Bitcoin. I think it's a huge risk being on zero in Bitcoin.
Jim, where's your money today? Is it in US dollars, sitting in a bank account waiting for a better opportunity? Is there somewhere better to put your money? Are you dollar cost averaging into Bitcoin? Are you dollar cost averaging into stocks? What are we dollar cost averaging into? Are we dollar cost averaging?
Yeah, so real quick, I just wanted to make one comment on something Jeff said. Jeff, if Bitcoin goes to zero, we all won't be fine, because you won't like where the S&P housing prices are.
Exactly.
That same day. Yeah. You know, that it goes to zero, that the rest of them are in no better shape. But that said, I think that crypto's a lot closer in the capitulation phase to being near a bottom. I don't think we've had very little, if any, capitulation in traditional markets, not even in the bond market, which arguably is, by on a total return basis, having its worst year ever. And I don't think we're close to a capitulation in those markets. I think if you wanted to play somewhere, dollar cost averaging into crypto, Bitcoin is a good place without any leverage, because this is the period where all the leverage is gone, because you might be dollar cost averaging into a market that could still fall another 50%. And you can't handle that if you're going to buy it into leverage. It may not fall 50%, but you have to be mentally prepared for that if you're going to continue to buy into this market. As far as the traditional markets go, a quick stat for you. Yesterday was the end of the first half of the year. You've probably seen the statistic that the S&P had its worst first half of a year since 1970. So its worst year in 52 years. As I mentioned, the bond market has had its worst year ever. If you combine the two, and the most popular thing in TradFi is the 60-40 portfolio asset allocation, this might be the worst 6-month period. In fact, we've got statistics on it going back to the early 70s, because we haven't found data yet that's gone back further. But not only is this the worst period ever in asset allocation, it is by far the worst period ever. In other words, in our lifetime, what would have been the worst period to own assets? And now when I say assets, I'm talking about stocks and bonds. The last 6 months ending yesterday is what it was. So I am not in any interest in losing any more money than I already have. So I'm going to wait on traditional markets until I see signs that are a lot closer to what I see in crypto: capitulation, concern, doubt. Right now, all I keep seeing are people saying, the Fed's going to stop and the second half of the year is going to be okay. Well, that's not usually the way it's going to work. It's when all hope is lost, which you're a lot closer to in crypto, is when you want to start leaning into these markets. So crypto, yes, but traditional markets, I'd wait a little longer on.
So do you think that we're going to decouple with a correlation to stocks? Because what you're saying is crypto has potentially already capitulated. I agree with you that the stock market is nowhere near capitulation, and they're nowhere near where crypto is. But I also know that if the stock market takes another 10%, crypto is going down. And if it goes down anything like it's been going down before, the stock market goes down 10%, crypto is going down 30%.
That's why I said you got to be prepared for another 50% if possible. And you're as far as the correlation thing goes, eventually, yes, I would argue. I think that the high correlation you see between risk markets, especially like the NASDAQ, especially like, unprofitable tech like the ARK stocks and crypto, has been extraordinarily high, and it shouldn't be that way. But I also know that I could stand here and yell it shouldn't be all day long, but it is, and it's going to stay that way for a while. Eventually, I think it is going to decouple, as Jeff was saying, as it becomes into focus that it is its own independent financial system or use case, as opposed to the problem we have now. I think what a lot of people didn't realize, which has caused this correlation, is we were all celebrating the adoption rate of cryptos. Hey, look at this hedge fund's getting into it, and this traditional investment fund is buying into it. Well, let's be honest. How did that work? They all opened up a Coinbase institutional account. They bought some Bitcoin. They turned to their technology analyst and said, now you're a crypto guy. So what should we do with this stuff? And he treats it exactly like he treats, analyzing Zoom or analyzing Pinterest. And so that's why we see the correlations like that. Now, that's not right, but that's the way it works. So yes, the correlations are going to stay for a while, but over the long term, I think when we really know that we're really in another upcycle, they should break, but they're not breaking right now.
You have such a brilliant way of articulating what a lot of us have been thinking. I must say, it's absolutely amazing. Alex, where is your money, bro?
It's mostly cash and basically trading short term. As I said before, I don't think this is a time to deploy and stay deployed. I understand, for people that are very long term, and doing DCA at these levels makes a lot of sense. I personally have very little doubt that prices are going to be much higher in a year or two, much higher. On the crypto side, when the time to basically deploy and ride a trend, my picks would be Ethereum, ETH, and Sol, not Bitcoin whatsoever, which I think is basically lacking a narrative and is going to underperform on the upside massively as it usually does. Actually not that much because of a lack of a narrative, but mostly because it's a lower beta asset within crypto. That being said, without leaving this, I do want to go back a little bit to the economy and put what it seems to be a contrarian view, which is the point that I like to focus more, and I think it's important to focus more on what is priced in than about the Fed, what the Fed is going to be doing, and about the Fed printing or not printing. And for example, I mean, the Fed right now is talking about 3.5% rates for the Fed fund rates by year end. That's what they have in the projections. That's what they're talking about one by one. The different Fed officials, that's what they want to see, most of them, keeping Mester aside, which is an extra hawk. Everybody else seems to be in the 3.4, 3.5% tight range for year end. And what has the market priced in for year end? 3.5%. Same on inflation. Inflation, the PCE inflation was 6.3% on the last reading, which was basically yesterday. And what the Fed is looking for year end is 5.2%, is not that far off. So if things go in line, the Fed doesn't have to hike more. And if the Fed doesn't have to hike more than what the market has priced in, that's not bearish, that's neutral. I think that's very important. That being said, I think inflation would come up higher than what's priced in, therefore putting pressure on prices in the short term, basically in this year. But that being said, I'm not that pessimistic as everybody else. I think mostly most of the damage is behind us. And on the S&P, I think, yeah, one has to be open to a 50% correction. Open doesn't mean that is probable. I think probable is another 15%. Another 15% things start breaking. Look at credit markets in Europe. Spreads are already closer to credit spreads are already closer to March 2020 levels. Is that extreme? The markets are already kind of breaking. You know, that's just about that.
I think that's a really important point. It's the credit markets globally that lead this. People are looking at stock prices and look at the credit spreads, CDS, what's happening. That's where the tension is coming. Look at Japan, and so as these big bugs hit windshields, things could unwind. And just think it's all counterparty risk. So something has to happen to stop these big.
All right. I mean, that's a good place, I think, to leave it. I think what we have now is we have 4,500 people watching the stream right now live. We have about 1,100 likes. I need to ask you a question. This is a specific question to Jeff. If we can get another 900 likes, that will get us to 2,000 likes, right? Will you play a song for us using one of the guitars?
No chance. I'm a good campfire guitar singer.
You don't have to sing. You just have to play. I mean, yeah. Going up quickly. It's going up quickly. I must say, it really is going up quickly. If I were you, I'd maybe get the guitar ready because the numbers are going. 1,300 is where we're at. It's going to be at 1.4 before you know it. Come on, one song.
You're very good at this. Yeah, good at getting likes. Yeah.
You sound like an auctioneer.
Yeah.
So, any chance we can get a song? Any chance we can get something?
Not a chance.
Oh man. Alrighty, guys, listen. It's been amazing. I love these Friday banters. They're just amazing. I love the way that you guys just said what you feel with no holds barred, and it just came out so beautifully. So, thank you so much. Love to see you guys all back in the family, back on the shows, back as part of the family. Thank you so much, guys.
Thanks, guys.
Thank
you, Ron. Thanks, everyone.
And to you guys, the Banter fam, thank you once again. It's been amazing being here. I love hosting the Fridays. I love the intellectual stimulation that you get on a Friday. It's just amazing. I did say that the Friday shows are brought to you by BitGet. They are our new sponsor for Friday Banters. as you can see, this is their exchange. They have an amazing exchange. They have futures, they have spots. They have a very strong copy trading feature. They don't have any KYC, which means that you can trade anywhere in the world, even in the United States, legally, futures and spots and altcoins. And today, what I'm going to do, like I'm going to be doing next week as well, is I'm going to be 10xing some portfolios. So there is a referral link in the description. You can see the referral link over here. I think right now there are 2 referral links that you really have to click on. One is you have to click on BitGet because we can get up to $8,000 in the sign-up bonus, 15% discount on your fees, and I'm going to 10x the portfolio. But more importantly, or as importantly, NordVPN, even though they didn't sponsor the show, we saw the information yesterday that Coinbase was selling geographical data of its users to not the IRS, but the immigration guys. You can't have your data sold. Just get a VPN so that they don't know where the hell you are. All right, let's quickly do a 10x of someone's portfolio. That's what we promised. So here's a link of the people. Here's a list of the people that signed up this week. I'm going to take number 100, and I'm going to 10x number 100. Let's hope that number 100 actually has money in his account, because if you don't have money in your account, I can't 10x your account. What will the number be? How much money is in this guy's account? 10x up to $10,000. We cannot go over $10,000. So if this guy's got anything over $1,000, he gets $10,000. Anything else, 10x his portfolio. What happened? Where are my columns? Hold on a second. Okay, number 100 is the row number. $151.07 becomes $1,510.70. My mathematics is right. Public school mathematics, but I'm doing good, guys. I'm doing good. Listen, guys, love you guys madly. It's been a great week with you guys. It's been a tough week, but here we are. We survived the most brutal quarter in the world, the second quarter of 2022. If you're still here, you're a survivor. I will see you guys again on Monday. Until then, have fun, trade well. Monday is the 4th of July. But we will be here. I'm doing a show with Coach K, and we're going to be talking about the levels that he's calling for every single one of the altcoins. So see you guys again on Monday. Until then, have fun, trade well, and spend some time with your families.